Chapter 13, S2 Pre-Trade Checklist. Well, you made it through 12 chapters of me ripping into your ear about the S2 pattern. At this point, you should really understand exactly what an entry looks like, exactly what an exit looks like, and exactly how to avoid bad trades. So with those three tools in your tool belt, you should now feel prepared to attack the market every day. But there's one more tool that you need, and it's this checklist. We went over it once earlier in the course when we got started and we didn't really know what we were talking about. But now that you're a fully competent S2 trader, let's go over it again so I can really hit home on a few key points when using this checklist. Again, the first thing we're always going to start with is the liquid 50 on the 15-minute. We're going to identify what direction it's moving. We're going to identify what zone it's been in, how long of the day has it been in that zone, all of that about the liquid 50 on the 15-minute chart first. Then we're going to break into the RSI. How far is the RSI from the liquid 50? How is it positioned in relation to the trend line? And how is it positioned in relation to the liquid 50? Have we hit overbought or oversold? These are the most important questions that we need to ask ourselves right when we sit down, right when we analyze those pairs. Where's the liquid 50 on the 15-minute telling us that we should go? And has that RSI hit overbought or oversold yet? Then we want to break into the next set of parameters. Have we hit ADR? Is the Asian range still in play? Are we still trading with inside the initial high and initial low set during the Asian session? Is there any identifiable confluence in the structure that we can draw on the 15-minute chart? If not, is there divergence? Or is there just no structure at all? You really need to take the time to identify what's going on with the RSI first and then see if you can match it on the candlestick. That's going to allow you to find solid structure to trade off of. So before you even go forward in the checklist, if you're about to enter a trade, you want to identify to make sure, hey, are we inside the initial high or low? Do we have any confluence of structure? Is the Asian range still valid? And is ADR still in play? If those all look good, we move through to the next set of parameters. Then we look at the EMAs. Are the EMAs trending? Are you trading off the 15, the 200, the 50, the 800 EMA? Or are you trading off that 8 EMA, which you know you're not supposed to do? Are you making a new high of day or low of day? Huge key level, high of day, low of day. Are you breaking through initial high that was set during Asia? Are you breaking through initial low that was set during Asia? Did the 1 minute hit oversold or overbought recently before you're going to enter? Because that might be an indicator that you're gassed and you need to wait for another cross. Is the 1 minute liquid 50 in the same zone that you need to be trading it? You cannot enter an S2 if you're selling in the buy zone. You can only sell in the sell zone on every time frame at all times of the day. I don't care what you're doing. If it's an S2, every TDI is in the same zone. Everything needs to line up. Liquid 50 in the sell when you're selling, liquid 50 in the buy when you're buying. Before you enter a trade, you want to always keep in mind, am I entering off a 15-minute candle formation? If so, which one is it? Is it a shift candle? Is it a railroad? Is it a Rocky? Be aware of that. Also be very aware of how close are you to the next pivot. That's going to determine the risk reward. That's going to determine the stop loss and the take profit. So you need to pay attention to those key levels, the pivot points, yesterday's high, yesterday's low, initial high, initial low. You want to make sure that if you're entering, you're in that 15-minute candle formation and you're not too close to a pivot because the pivot is going to be support or resistance in the way of your trade. You want to also keep in mind, where is the most recent shift candle? If you're going long, you want to make sure you're either trading an upshift candle or that the most recent shift, the most recent 813 EMA cross is an upshift. Vice versa, if you're trying to sell it, you want to make sure you're trading the downshift. Also take note of how far are you from the high of day or low of day. And have there been multiple hits to the high of day or low of day price level? Because if there have been multiple attempts to break that structure level, whether it's the high of day or low of day, you might want to take that as an indicator to say, hey, this might be something that I don't want to get involved in until that level is broken. Let me wait a few minutes and see what goes on here. Let's see if we can break the level first. No trade should take more than 30 or 45 minutes to move into profit with the S2 pattern. If you're lingering in a trade and you're up 5 pips and you're like, oh, Austin says this is supposed to go 15, I've been in this for an hour and a half and it's not moving, take the pips. You should move nicely into profit within 30 to 45 minutes, meaning 5, 6, 7. It should get to your 15 pips relatively quickly. Now, I'm not going to say you're going to get 15 pips in 30 minutes every time. That's not realistic. But your trade shouldn't be progressing in the direction you'd like it to progress quickly, meaning it should not take 3 hours to get 15 pips. If it does, you've stayed in too long, so take the trade. Once you're in a trade, a key, very, very key point, especially for new traders, is to only watch the 15-minute chart. If you watch the shorter term time frames, you're going to get induced to potentially pull the trade, add positions, and do all this crazy crap that you don't want to get induced into doing. You want to trust the analysis that you started with, which was on the 15-minute time frame. That's going to be your trend identifying time frame. The 1 minute and the 5 minute are just for entries. Once you're in, close those time frames. Just stay away, trust the 15-minute chart, and you'll get your 15 pips. You want to really pay attention as well to the RSI. It's going to make new highs if you're breaking out on the candles for new highs. It's all going to confirm itself. Just as if you're selling it, it's going to make new lows. You're not going to want to trade an RSI that is in some type of a structure that you can clearly identify on the TDI, because the RSI is just as strong as price action is on the candles. They're a direct reflection of each other. That's why when they match up, we have the confluence, we have the double confirmation to trust what we're seeing. Trust that we can trade on what we're seeing, because the RSI, the strength, is telling us that the candles are matching it. That's really important. So pay attention to the direction of the liquid 50. Pay attention to the RSI making new highs or new lows, depending on if you're buying or selling. That's going to really be a good indicator of, hey, this trade still has some space. Let's stay in. We could get more pips out of this. Or, hey, this trade is slowing down. We're getting close to a pivot point and the RSI is not breaking for new highs. Let's get out. Take the winner. Take the 5 pips. We move on. So pay attention for that. Remember, time management, you want to make sure these trades move into profit within the first hour, and you want to make sure that once you're in a trade, you're only watching the 15-minute chart. Those candles only close every 15 minutes, so make sure you're keeping yourself busy doing other stuff. Work on chart markups, work on other work, talk in the VTF, ask me questions, send me chart markups for me to review for you. Whatever you can do to improve yourself, once you enter the trade, go focus on that, because you want to let the trade do what it's going to do. Do what the back testing has showed us it's going to do. You don't want to involve your emotions in that. Trust me, there's too many of them. Let the charts just do their work. Put the trade on the S2. Majority of time, over the long period of time, you're going to win. Remember, news is a very important piece to the S2 pattern. We do not trade fundamental news because of what it can do to the market, the impact that it can have. There's always people talking about the different things that the market does. The brokers are doing this, the market make. Don't worry about any of that crap. It doesn't matter if it's true or not. Worry about the fact that the markups, the back testing, the actual facts, the numbers, the math, all of it shows us that the S2 pattern works when you do not trade news. If you see news coming and you're in a trade that could be impacted, you want to take your trade out. Close your trade, take your winner, come back tomorrow when there is not as much news. Okay? That's the safest way. That guarantees that you're going to survive. That guarantees that eventually you'll become a profitable long-term trader, because you'll pull out, you'll take the winner, and you won't take the risk of what that news event could do to your trade. I've seen it jump stop losses in the wrong, and I've seen it jump take profits. I've seen it done crazy things, and it's better to just keep the money in your account, keep the money in your pocket, trade around the fundamentals, around the herd. And if you see news coming and you're not in a trade, analyze, let it hit, make sure that it's not shaking up the market, throwing irregular candles or any of that stuff, and see if you can trade it after the news has already come in. Be patient on it, let the news hit, then get involved. And also pay attention to correlation with news events, meaning, for example, with crude oil news, for some reason we've seen, there's a million reasons, I don't say for some reason just to say it, I say it because there's a lot of reasons why it could be. There's no one specific reason, but for some reason, oil news impacts the US dollar Canadian dollar pair, USD CAD, all the time. There's a lot of reasons for it, and you can do the research on it. But the point of the matter is the reason doesn't matter. The point is that that's high impact news at 10:30 every Wednesday. We avoid trading that pair or any pair involving the US dollar at 10:30 on Wednesdays because of the news event. Let it hit. If it doesn't shake the market, great. Find another trade. But if it does shake the market and you're in a trade, you're going to be upset. Even if it goes in the right direction, the spreads go crazy, everything goes nuts, and it's better to not be involved. Sit on the sideline with your popcorn with us. It's much more enjoyable. In the next chapter, I'm going to explain to you the mindset shifts that I need you to make in order to actually apply all of this S2 knowledge, all this technical knowledge into the market. Because really, at this point, we're 280 or so slides into this course. You should understand that the technical aspect is just like speaking a language. You study this course enough, You talk in the VTF enough, you ask me enough questions, you ask our other mentors enough questions, and you're going to pick up the language that we speak. You're going to learn how to read the charts. That's a no-brainer. If you just put in the time, you're going to learn how to read the charts. Absolutely. But that's a completely different conversation from entering winning trades. Having the proper psychology behind good technicals is all that matters when entering good trades, when trying to be profitable in the market. If your psychology is not on par with your technicals, you're not going to do well. Meaning, you need to have solid technicals, solid understanding in the market, be able to identify proper S2 trades, like you should now be able to after watching this entire course. But all of it is really not worth anything at all if the psychology is not sound. So let's get into the next chapter. Please take a lot of notes on this chapter because these key principles on the mindset shifts that you need to make are crucial to long-term profitability.